Welcome to the Wealth Management Quarterly Market Commentary. I'm Rob Holford. This quarter, we're once again joined by Scott Kuby, Senior Investment Strategist with the Carson Group. Scott, thanks for spending time with us.
It's great to be here.
Another solid quarter turned in the market, Scott. Give us your thoughts and walk us through the performance and why the solid growth.
You know, we saw really good numbers again. This was the fifth consecutive quarter where the S&P 500 increased after the struggles we had with COVID. The S&P 500 rose 8.5% in the second quarter. It's now at 15.3% for the year through the first 6 months of it. We've really seen a great overall strength in the performance of a number of areas, but especially driven by earnings growth. In the first quarter, earnings rose over 50% and are expected to rise over 60% in the second quarter. Now, one of the areas that we did see in the second quarter was a bit of a reversal in the fortunes of those areas that are most economically sensitive. For instance, small cap stocks, value stocks, and international stocks tended to underperform a little bit, while growth stocks and bonds actually did a little bit better during the second quarter.
So, how do you view the overall health of the economy and what fundamentals are driving it?
So the overall economy is improving. It's probably not improving quite as fast as we would like it to. Reopening is really what has driven the overall improvement in the economy, as we've seen vaccinations start to continue to increase and start to allow more people to move out, especially as some of the social distancing restrictions have been loosened really in almost the entire country. What is really important is to get people back to work, and that's where we've seen slower growth than we would like. The June employment numbers came in at 850,000 new jobs for that month, which is a really strong number and would be sufficient in order to get the economy back on track. However, the gains the two previous months also combined for 850,000, and that's a little bit too slow in order to get us back to where we want to go. One of the challenges we're seeing is whether it's because of enhanced unemployment benefits, concerns about COVID, the lack of open schools, or just a reassessment of how important work is. People aren't willing to return to their jobs quite as quickly as we would hope, and therefore that's slowed down some of the overall growth rates.
We can't let you go unless we talk about risk factors. What are you watching for the remainder of the year?
So I think the biggest risk is that we have a variant of the virus that is much more resistant to the vaccines than the current variants that we're fighting right now. That could overall put us back into some degree of social distancing or some form of lockdown, which would obviously pressure the economy. So that's the one we're watching most closely. We also have concerns that China, on a number of different fronts, is starting to be more assertive and may have some conflict with the United States, not of a military variety, but some economic conflict that may pair up and cause concerns within the markets that could cause a short-term correction. We're also concerned about the overall attacks that we've seen from ransomware, where we've had the computer hackers start to hold companies hostage for data. While those haven't had a whole lot of effect on the economy so far, we do worry that those may cause some concern if they were to hit more economically sensitive areas, especially certain financial information. I think one of the biggest risks, though, that we're focused on is the fact that we've really had a great run. As I mentioned, we've had 5 straight quarters of strong increases. We really have had part of an overall market that has been very supportive and gaining back and reaching new highs. We want to make sure that you as investors don't get caught up in that surge and start to get euphoric and start to chase some of that risk higher. Make sure you're talking to your advisor, make sure you're reassessing your portfolio well, and avoiding taking on too much risk at the wrong time.
Great insights as always, Scott. We appreciate you spending time with us today.
Thanks.
Well, there you have it. Another quarter in the books. As always, should you have any questions, give us a call and we'll schedule a meeting. For the Wealth Management team, I'm Rob Holford.